It all started with a piece of news that barely made a ripple. On November 27th, the CME exchange suddenly halted silver trading mid-session. The official reason? A cooling system failure. But traders know that glitches like this often mean someone powerful is in trouble. That discrepancy prompted me to dig deeper, and what I've uncovered is not just a story of market volatility. It's an investigation that leads from emptying vaults in London to the very heart of Wall Street. I believe we are witnessing the final moves in a script that has played out many times throughout history, and at the center of it all is America's most powerful bank. In studying the history of financial crises, I've found that they almost always follow the same four-stage blueprint, especially when it comes to a collapse of confidence in paper assets. The story always begins the same way, with a stage we'll call the foundation. A nation dominates the world through real production. Its currency becomes the global reserve because it's backed by real value and trust. This is the era of honest money, where a paper note is just a claim check for a real asset, be it gold or silver. Then, the story enters its second act, a period we can call the Great Deception. The empire discovers it can print money, and the world will still accept it, because there is no alternative yet. The link between money and a real asset is weakened or severed entirely. It is at this stage that complex financial instruments, paper promises like futures, ETFs, and unallocated accounts are created. They allow the illusion of infinite supply. For every ounce of real metal, 10, 50, even 100 paper claims are created. This stage feels like prosperity, but it's a slow poison, corrupting the system from within. This inevitably leads to the third stage, the squeeze, or the reckoning. The mathematics catch up. Debts become unpayable, and the printing press is forced into overdrive. Confidence in the paper currency begins to evaporate. Investors, and even entire nations, begin to demand delivery of real assets instead of paper promises. The vaults begin to empty. Everyone suddenly realizes the emperor has no clothes, that there are far more paper promises than real assets. The panic begins. And this leads to the finale, a fourth and final stage we can call the break, or the reset. The paper market collapses. Exchanges halt trading, change the rules, and force settle contracts for cash, because the physical asset simply isn't there to deliver. The currency undergoes a severe devaluation, and wealth transfers on a massive scale from those who held paper promises to those who owned real, tangible assets. This script is not a theory. Let's watch it in action. In ancient Rome, at the height of its power, the denarius coin contained 95% pure silver. This was the foundation of their economic might. But endless wars required funding. Emperor Nero was the first to begin debasing the coinage by adding copper. His successors continued the practice. Over 2 centuries, the denarius went from a silver coin to a copper token with a thin silver wash. This was the Great Deception. When the people and the soldiers realized this, the reckoning arrived in the form of hyperinflation. Prices doubled every few days. The economy collapsed, and this became one of the primary drivers behind the fall of the greatest empire in history. If this first example resonates with you, and you're beginning to see the outline of this historical blueprint, I invite you to subscribe. Because the way this same script played out in Spain, and then in Britain, decodes this pattern even more deeply. Fast forward to 17th century Spain. After the discovery of the New World, mountains of silver poured in. The Spanish real became the world's currency, but Spain produced nothing. It bought everything. Silver flowed through it like a sieve. When the silver flow dried up and the debts remained, the empire went bankrupt 7 times in 70 years, enacting a reset on its creditors. And of course, the most vivid example from modern history, the 1970s. The dollar had just been severed from gold, and inflation was in the double digits. Two Texas billionaires, the Hunt brothers, understanding their paper dollars were being debased, decided to exchange them for real money, silver. They began buying not just physical metal, but futures contracts. They drove the price from $6 to nearly $50 an ounce. But they did something that terrified the system. They started demanding physical delivery on their contracts, draining the COMEX exchange vaults. This was the squeeze playing out in real time. The system was on the verge of collapse. And so the exchange did what the system always does when it's losing. It changed the rules. On January 7, 1980, Silver Rule 7 was implemented, which effectively banned opening new long positions. It banned buying. You could only sell. Then, margin requirements were hiked dramatically. The Hunt brothers, who were heavily leveraged, were bankrupted overnight in an event known as Silver Thursday. But here is the lesson everyone misses. The brothers lost because they tried to fight the system with its own paper instruments, futures. The people who had simply been buying physical coins at $6 and holding them were still enormously profitable, even after the crash. They could not be forced to sell by a rule change on an exchange. This history led me to ask the central question. What if this time, the squeeze is being prepared not by an outsider, but by the system itself? I started gathering the evidence, and the picture that's emerging is alarming. I've studied the mining industry reports. We are in a structural silver deficit for the 5th year in a row. We consume more than we mine, and this gap is only set to widen. The demand from solar and EVs isn't optional. It's written into laws and government programs worldwide. And new mines, the data shows, are not coming online for another 10 to 15 years. Supply is essentially fixed, while demand is legally mandated. When I looked at the data from the COMEX and LBMA vaults, I didn't just see a decline in inventory. I saw a collapse. The vaults are emptying. The London Bullion Market Association, LBMA, used a phrase in a report that sent a chill down my spine. A state of seizure. That's a medical term for a system in convulsions. Lease rates for physical silver have spiked to 30% annualized. Banks are willing to pay credit card rates just to borrow the metal for a few weeks. This is a cry for help. And this is where it all comes together. While chaos reigns in the market, one player is acting with cold precision: J.P. Morgan. After studying their activities, I've concluded that they are not just participating in this market, they are potentially controlling it. After inheriting a massive silver short position from Bear Stearns in 2008, many observers believe they flipped their stance. For 14 years, they have been quietly accumulating what may be the largest private hoard of physical silver in history. They learned the Hunt brothers' lesson. Why fight the system when you can become the system? So, what does my evidence file show? On one hand, an undeniable and growing physical deficit. On the other, a paper market that is on the verge of breaking. And at the center of it all, the most powerful bank, which appears to have prepared for this moment better than anyone. Bank of America is projecting $65 per ounce. But in my view, they are being catastrophically conservative. They are analyzing a normal market. We are talking about the moment the paper market breaks. The 1980 silver price, adjusted for inflation, is $170 in today's money. And that was without today's massive industrial demand. When solar panel manufacturers realize the COMEX vaults are nearly empty, they will start buying any available metal at any price. Because for them, it's not an investment, it's business survival. That is when the real eruption will begin. I am not a financial advisor. I am a researcher sharing the results of my analysis with you. And my analysis shows that all the pieces of the puzzle are in place. The structural deficit is the gunpowder. JP Morgan's position is the fuse. And the coming Fed meeting, with its potential rate cuts, is the spark. The Hunt brothers were right in their analysis, but they were too early. Today, it seems their thesis is ready to become reality. Only this time, the main player may not be fighting the trend. He will be riding it. History teaches the same lesson time and again. When trust in paper breaks, a great reset to real value occurs. The silver market today is not just a bull market, it is the canary in the coal mine, warning of a much larger systemic reset. History doesn't offer investment advice, but it does offer a blueprint to understand the times we are in. Subscribe, and we will continue to decode it together so you can navigate the new era that is dawning.